Hello everyone. This is the pre-market report video for today, March 14th in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, after our Indian market close, all three US major index opened mildly negative, but quickly it turned positive and most of the day it traded in the positive region. However, in the end, except Nasdaq, other two closed negative. It's all because of the same banking crisis reasons. We all know and we discussed enough about what happened to the Silicon Valley Bank and Signature Bank in detail in last two pre-market videos. So, I don't want to bore you guys by repeating the same information. Other than those, as explained in the yesterday's pre-market video, Fed created the funding pot to support those regional bank depositors who are all in trouble. Here, they made it clear they are not going to use the taxpayer money. Rather than they are going to lend the money to those banks for up to 1 year by having the treasuries as collateral. So, if banks don't have treasuries, they won't get this funding pot support, which made the vulnerable banks to fall further. And one of those vulnerable banks is First Republic Bank. And this First Republic Bank is equally as big as Silicon Valley Bank. They got the deposit of near 212 billion US dollars. And the problem here is 70% of deposit is not insured, which is typically higher than that of the US bank average deposit insurance, 55%. Already from Wednesday, First Republic Bank dropped over 33% till Friday. Now last night it dropped another 66%. It's not just First Republic Bank, other regional banks such as Western Alliance dropped 47%, CareCrop dropped 27% and Bancrop dropped 29%. Basically, it's just disastrous on regional banks in US market yesterday. Even the big banks dropped significantly. For example, Wells Fargo dropped 7%, Bank of America dropped over 5% and JP Morgan dropped nearly 2%. All these made the S&P 500 and Dow Jones to close negative. However, this also reduced the 10-year Treasury bond yield down to 3.55% from over 3.7% day before yesterday. Just for info, last week same time it was above 4%. Now that dropped to near 3.5%, which is huge positive. Another huge positive info yesterday was regarding the Fed rate monitor tool. It's currently showing the probability of over 30% that Fed will pause their interest rate decision during the next upcoming FOMC meeting, which is on March 22nd. In simple English, 30% probability Fed won't increase the interest rate at all. A week ago, this tool showed 80% probability that Fed will increase 50 basis points and that now dropped to near zero. This made the Nasdaq and all the tech stocks to close positive. At the end of last night, Dow Jones decreased by 0.28%, S&P 500 decreased by 0.15%, whereas Nasdaq increased by 0.45%. Then about VIX dropped over another 20% and moved near 26.5. This bank crisis in US market made the oil to drop over 3%, and at the time of this video, Brent crude oil was trading at 80.7 US dollars per barrel and WTI crude oil was trading at 74.5 US dollars per barrel. In terms of Indian ADR, only Wipro ADR was marginally down. All others decreased by 1 to 2.5%. Again both the banks dropped further. Then about SX Nifty at 3 AM Indian Standard Time, it closed at 17,176. By equating that to our spot market, it's kind of indicating a 15 points negative or gap down opening. Regarding other India related info, yesterday 5:30 PM Indian Standard Time, Ministry of Statistics released the India's February month consumer inflation. And the data comes as 6.44%, which was less than that of the January month. However, it's higher than the RBI target 6% and the economist prediction. Despite that, neither India's future market and nor SX Nifty reacted to this data. Coming to institutional activities, FII's net sold shares worth approximately 1,540 crore rupees and DII's net bought shares worth approximately 1,420 crore rupees. As a summary, still banks and oil stock look vulnerable. However, Nasdaq positive close is the encouraging thing for IT stocks. Let's see. Tonight, US consumer inflation data is due to release. At present, according to Reuters economist, they expect the consumer inflation for February month to come as 6%, which will be 0.4% less compared to that of the previous month. Just for info, last month, for January month, the economist predicted as 6.2%. However, the data came as 6.4%. So today, I expect the Nifty to close near wherever it opens. In simple English, I expect on daily chart Nifty to form either a doji candle or the short bodied candle. Here, please don't make any investigation based on this since it's just my opinion. Now coming to technical, yesterday Nifty opened positive but erased all gains in the late morning and it remained under heavy pressure throughout the day. Thus, on both Nifty and Bank Nifty forms a very long bearish candle with medium upper shadow and short lower shadow. Both the candles were reasonable ones and at present it broke the all important support level and closed below the 17,200 levels, which is negative. However, on the downside, Nifty has the major psychological support between 17,000 and 16,900 levels. A sustainable up move and uptrend continuation can be confirmed only if it passes above 17,400 level. But for now, the trend is still indicating the bearishness continuation. Then coming to moving average and technical indicator, for Nifty at present on daily chart, it's same as yesterday, just strong sell signal as it trades below all the known moving averages. And for Bank Nifty, at present, it's just only above 200 days simple moving average. Other than that, it's all sell signal. So as a summary, it's a strong sell for both moving average and technical indicator. Just for info, at present, RSI value for both Nifty and Bank Nifty is around 35. From option change in open interest, regarding Nifty, yesterday, very less put options were added at below 17,100 and significant put option unwinding took place between 17,250 to 17,600. And there are good number of call options were added at 17,200 to 17,600. 17,300 got more number of new call options added. So 17,300 is the immediate resistance to break. At present, the put call ratio is just 0.5, which is very low. It's kind of showing that Nifty is likely in the oversold conditions. From open interest data, there are still huge number and maximum put option open interest is at 17,000 followed by 16,800. So 17,000 is the support to look out for. Breaking that can lead the selling down to 16,800. Then in terms of Bank Nifty change in open interest, there were some amount of put option unwinding took place at above 40,000. Significant call options were added at above 39,500 mark and 40,000 got the maximum new call option open interest addition. So 40,000 is the immediate resistance to break. From open interest data, the maximum put option open interest without call option is present at 39,000 and followed by 38,500. So 39,000 is the support we need to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.